Asset management and management consulting are two distinct industries with lots of similarities and differences. They are popular destinations for top graduates from all over the world. And in this video, if you stick around, you're going to learn the 10 key differences and similarities between asset management and management consulting careers. So with that, let's get straight into it. All right, number one, asset managers focus on managing financial assets for their clients. For example, an asset manager might be responsible for managing a portfolio of stocks, bonds, and other financial instruments on behalf of wealthy individuals, pension funds, sovereign wealth funds, insurance companies, and other large institutions. Their primary goal is to generate returns for their clients whilst minimizing risk. Consultants, on the other hand, focus on providing advice and expertise to businesses and organizations on a wide range of business issues. For example, a management consultant at a BCG or a McKinsey might be hired to help a company develop a strategy to enter into a new market or to improve their supply chain operations. So essentially, consultants work with their clients in order to identify problems, develop solutions, and then they provide guidance and support when implementing those solutions. All right, next we've got expertise. Asset managers or portfolio managers are typically professionals with deep knowledge in financial markets, investing, and portfolio management. For example, a portfolio manager in asset management might have a degree in economics or finance, and they might have done the CFA, Chartered Financial Analyst qualification. This is focusing on portfolio managers, so those doing the investing in asset management. There are obviously sales roles and all these other roles, but for the most part, we're focusing on portfolio managers for this example. Also, there are individuals who have non-econ and finance degrees, but eventually if you're in an investing role in asset management, you're likely going to be doing the CFA, the Chartered Financial Analyst. Consultants, on the other hand, are more likely to come from a wider range of backgrounds. Having said this, they might have specialized knowledge in specific industries or functions. For example, a consultant working in the healthcare industry might have a degree in medicine or public health, whilst a consultant covering the technology industry might have a degree in computer science or engineering. Asset managers work with institutional investors, individual investors, and corporations in order to manage their investments. For example, a asset manager might work with a mutual fund company that manages investments or makes investments on behalf of thousands of individual investors. Or they might work with private wealth management firms in order to manage the financial assets of high net worth individuals and families. On the other hand, management consultants typically work with businesses and organizations of all sizes and across all industries, so it's very broad. For example, a management consulting firm might work with a small startup in order to manage its marketing strategy, or with a multinational organization in order to streamline their operations and how they operate on a day-to-day basis in order to be more efficient as a large company. Asset managers are primarily focused on generating returns for their clients in line with their return expectations, whilst also maintaining or managing risk, so mitigating risks in order to achieve return targets. For example, an asset management firm might target a 5% annual return for their pension fund client, whilst minimizing the risk of losses due to market fluctuations. Consultants, on the other hand, are focused on helping their clients solve specific business problems or achieving specific strategic objectives. For example, a management consultant might help their client develop a new product line or improve their customer service operations. As you can see, if you're going into asset management, specifically in the portfolio management side, you're going to be very markets focused, investing in financial markets, keeping up to date with what's going on in the global financial markets. On the management consulting side, it's a bit more commercial in the sense of it's more focused on businesses, organizations, operating efficiencies, strategy. So it's less markets focused and more focused on the entrepreneurial side of improving businesses and making them run smoothly. So if you're interested in business strategy, product development, all of that, management consultancy is going to be more relevant for you. If you're more interested in financial markets, then asset management might be of interest to you. With that, let's go to the next point. Asset management firms build long-term relationships with their clients, often working with them for 5, 10 plus years. So a very long-term relationship. After all, their clients are typically investing money for a very long period of time. An example would be if an asset manager is managing or investing money on behalf of a pension fund or a pension scheme. That money is being invested today in order to help people draw a salary or an income source in 20, 30 years when they retire. Consultants, on the other hand, often have shorter engagements and tend to work with a wider range of clients. For example, a consultant or a management consultant might be hired to help a company on a specific project, and that project might last 1 or 2 or 3 months, and then that's it, and then they move on to the next project. Or they might provide expertise in a particular area of the business of a startup or an established company. Once the problem is sorted out, after it might be 5 months, less than that, more than that, a year, whatever it is, they are done with that client, and then they might reach out to them if they need any other advice or help in the future. But for the most part, they move on and go to the next client. So it's very short-term based compared to asset management. So if you're interested in long-term relationship management, go work for an asset manager. If you're interested in working on lots of different projects, lots of variety in terms of your client relationship, then look at management consulting. Also, do keep in mind mind, if you work in asset management or if you work for a management consulting firm, you are going to be specializing in a certain subsector, right? So in management consulting, it might be split by industry, so healthcare companies, technology companies, etc. And then you might cover one silo or vertical. In asset management, your coverage might be specific to region, so you might cover only UK clients or international European clients or African clients, and so you're going to focus on one silo. If you're in the investing type of role, you are probably going to be focused on one asset class, so you might only do fixed income, or you might do equities or alternatives. Although there is variety in both of these, when you enter the field, you're not going to be exposed to all of it. You're going to be focused and become a specialist in one subsector or one niche vertical, so keep that in mind. All right, here's an interesting one: fee structure. How do asset managers and management consulting firms get paid, or how do they earn their money? So with asset managers, they are managing money for their clients, and as a result, they charge a percentage of the amount of money that they manage for their clients each year. So if they are managing $100 million for a client, they're going to charge a percentage or 0.5% for managing that money each year. For context, if an asset manager is managing £1 million or dollars for a client, in actual fact, it's going to be a lot more than that. Typically, the figures are north of 50 million, 100 million, sometimes even $1 billion. To make it easy, if they're managing $1 million for a client and they charge 1% on that $1 million each year, they are charging 10,000. So that's their management fee. They get that for managing the money. So that's 10,000 per year that they manage the money. Consulting firms, on the other hand, charge hourly rates and fixed fees for their services. For example, a management consulting firm might charge $500 per hour for the time of a senior consultant, or they might charge $50,000 for a specific project to develop a new strategy for a business. Here's an interesting one. This is very important as well. Asset management firms are typically organized as you've got salespeople and you've got investment professionals. In the investment professionals, you've got analysts, you've got traders, you've got portfolio managers. The more senior you become, the more you are likely to be a portfolio manager or a senior trader. But you start off as an analyst and you're working on like pitch books, Excel, all of that kind of stuff. So you've got the investment teams in asset management. This consists of analysts, traders, and portfolio managers. They all work together in order to manage client money or manage client assets and invest it into the financial markets. Then you've got salespeople, there's analysts, associates, directors, so on and so forth. They are basically managing the relationships with the clients. So trying to bring in new business and making sure existing business is kept happy and attended to. On the flip side, consulting firms are typically structured around specialties or practices. So you've got teams of consultants working together to provide a specific service to the client that they're working for. For example, a consulting firm might have a strategy practice where this team or this division works specifically to develop new strategies for any clients that need that type of service. Additionally, the consulting firm might have a technology practice. So if a client comes and needs help with technology consulting or advice, then the technology individuals or teams will be working on those types of projects. And then the management consultant might have a HR practice, whereby companies that need help improving their HR processes would be leveraging or using the HR practice from the consulting firm. Investment horizon. So as mentioned before, asset managers focus on a long-term relationship management style, right? Similarly, they have a very long-term investment horizon focus. They are investing in decades or multiple decades for their clients, and so it's a very long-term investment horizon. As a result, they focus on building diversified portfolios that can generate returns over decades to come. For example, an asset manager might invest in a mix of debt and equity, so fixed income or bonds, and equities or stocks, in order to generate returns or perform well over the long run, even if there's lots of short-term fluctuations in the market. If you're in management consulting, on the other hand, your time horizon for your projects are a lot shorter than that of asset management, and you're typically working towards an end date, and so it's not multi-decades or even a decade long. Your projects are a lot shorter, so typically they might be months or at the upper end years, but that's less likely. It's more common to be in the months. For example, a management consultant might work with a company for 6 or 7 months in order to develop their marketing strategy, and once they reach the end of that term, that's it. The interaction ends and they move on to the next client. Asset managers are subject to a range of regulatory requirements, especially if they are managing money for individual investors. For example, some of you might know of the Securities and Exchange Commission, SEC. Asset managers might be required to register with them in order to ensure that they aren't breaking any laws or doing anything dodgy. Consulting firms are generally not subject to the same level of scrutiny or regulation. Having said this, they may be required to comply with industry-specific regulations and codes of conduct. Asset managers are responsible for managing risk and minimizing losses for their clients. For example, an asset manager may invest in a diversified portfolio in order to minimize the risks of fluctuations in the market impacting the portfolio and in order to reduce the potential losses of that portfolio. Or they might use hedging strategies in order to reduce the potential loss or risk of losses in a particular sector. Consultants also manage risks for their client, but in a different sense. They're not mitigating or managing risks in terms of financial markets. They might work with their businesses or clients in order to help them manage risks from an operational or a business perspective. For example, a management consultant might be working with a manufacturing company, and so in order to manage their risk, they will be identifying ways in order to minimize the impact of maybe a supply chain error, or if something happens in the back end or in the supply chain of the manufacturer's process, how can they mitigate that risk and ensure business carries on as usual, as opposed to being impacted and brought to a halt as a result of a supply chain issue. In summary, asset management and management consulting careers are two distinct industries with lots of similarities and differences. Asset managers focus on managing financial assets. They have deep financial expertise. They charge a percentage of the assets under management, and they work with individuals and organizations and large institutions. In contrast, management consultants provide a wide range of advice and expertise across industries, topics, and sectors, but with a key focus on business issues specifically, as opposed to financial markets. They work with businesses of all sizes and across industries, and they charge an hourly rate or a price per project. Before we go, check the links in the video description below for resources that might help you if you're interested in breaking into these industries. Specifically, there's a CFA discount code from Analyst Prep below, so for those of you interested in asset management, you might want to do CFA. You could get discounted resources, but I'll let you check them all out. If you made it to the end of the video, make sure you give it a thumbs up if you learned something new, and also subscribe if you're new around here, and I will see you in the next video. Peace.